Okay. All right. So one of the things I want to start the conversation off with today is that first of all, a reminder to you guys in case you didn't remember this or in case you didn't have this information. We're doing a free event in the Black Business School on Friday for anybody interested in owning a multifamily property. If you've ever wanted to know how to buy property and rent it out and things like that, we have an expert in the Black Business School, one of our faculty, Julian Gordon. He's a Stanford University graduate. He's also he's really, really good at entrepreneurship. He's really, really good at real estate. And he's actually going to talk extensively in the real estate version of the Emancipation Equation event that's going to happen this upcoming Friday, August, I think it was August the 2nd. And so if you want to join that, just go to theemancipationequation.com, that's theemancipationequation.com. And what I'll do is I'll put this in the chat so you guys can see that. All right. So let's see here. Hey, Clinton, how are you? Okay, so there you go. So you guys have the URL. So join, come on in. It's totally free. I think you guys are going to enjoy it. And the reason that we decided to do this is because we survey our students in the Black Business School. We want to be the best educational institution that you've ever gone through. And that's not hard to do because a lot of universities don't really give Black people what they need. They give maybe they work for other people, but they don't work so well for us. We saw a lot of people that are disgruntled because they have all this debt and they don't have skills. They don't have real skills, life skills that help them achieve the goals that they're trying to achieve. So in a way, the Black Business School takes a little bit from what we gain from trade schools, right? Trade schools, you learn a specific skill that you can trade in the economy and make money from. And except we kind of elevate that a little bit in the sense of saying, okay, in addition to whatever trade you want to learn, you should learn the fundamentals of running a business. So that means if you have a child that says, I want to be a carpenter, that's fine, that's great. Or an electrician, that's great. But also, if they go through the Black Business School, they can learn the fundamentals of entrepreneurship. So they can learn how to set up their LLC, structure their business in the right way, set up their tax situation, make proper investments so that they can really run a super efficient company. They can learn economies of scale. They can learn delegation. They can learn how to structure an institution, an organization, so that they're not working their butts off. So for example, a lot of people think that you're doing better than other people when you are making some high hourly wage. Like I make it, our plumber, I don't know what his hourly rate is. I think it's $100 and something an hour or something, maybe it's $80 an hour. And that's great, right? So every time, something breaks down, I can't fix it. So we call the plumber, right? So the plumber comes by and he gets his money and we're like, oh, we got to write this big check. Oh God, this guy's just getting over. But here's the thing about my plumber. Our plumber is working himself into the ground. Our plumber is so busy that he can't even pick up the phone half the time. And that's good. That's better than not being busy. Working for a high wage is better than working for a low wage. But I want your children actually to learn how to work for no wage. I don't want your children to even think about trading time for money, hours of your life for dollars in your bank account. You don't have to always make that trade. So if you train yourself on business, if your children are trained at a high level on business and organizational structure and entrepreneurship, then what they learn how to do is they learn how to delegate. So if this plumber is getting so much business that he can't handle it all himself, then what he should do, in my opinion, is he should go, and if he has a structured organization, he can go hire 10 plumbers and pay them all a really good rate, $40, $50, $60 an hour, whatever, and then charge us, an uptick on that, right? So let's say we're paying $90 an hour. I don't know what plumbers charge exactly, but let's say we're paying $90 an hour and he's paying them $50, $60 an hour, then he's making money when he's sending the plumbers out to do the different jobs, right? That's how you scale up. That's how you that's how you go from making, tens of thousands, maybe six figures, to making seven figures and beyond is scale and structure. So I believe that one of the most important things that a young Black child can learn about wealth and investing is how to scale, how to structure. And so you must ask yourself, do my children know how to scale and how to structure, or do they just know how to work hard? I know a lot of lawyers who make a lot of money, who make, $300 an hour, but they work themselves into the ground to the point where they have to trade quality of life for income, right? Anybody know like really busy, super busy lawyers or doctors? I knew a guy, or I didn't know him, I indirectly knew him, he was a friend of a friend who literally was the labeled, I think, one of the busiest doctors in America. I think he was top 3 in terms of the busiest doctors in America. And as a young man, I remember thinking, man, he must be making a killing. This must be amazing for him. He's getting paid. And then I thought about it and I said, man, I would want that life. Like now I look back on that and I'm like, who wants to work until you're sick, until you work yourself into an early grave just to have extra money that you won't even have time to enjoy? Who wants to do that? No. So you're going to have to work hard at some point. If you want to get ahead in life, your children are going to have to work hard at some point. So we teach that in the Black Business School. We tell you to send your children to business school at the age of 5 or 6 or 7. That's how Black people are going to have excellent business owners in the future, excellent entrepreneurs, excellent investors. As a culture in our school, one of the things that we believe in is that we believe your children should be in business school before they're in elementary school. We believe your children should learn business as well as they learn football and basketball. We believe that if your children learn, organizational structures and things like that, they can figure out like how they want to make their money. So they can they can have all the options, right? They can go out and if they want to go work for a low wage and whatever and be, and barely get by, they have that choice. But if they want to work for a high wage and just work themselves, work 80 hours a week and as a $200 an hour lawyer or something like that, they can do that. Or if they want to scale up as a business owner and maybe have 10 lawyers that are working for them around the clock, even when they're on vacation, they can do that too. And in fact, I went to go see my financial advisor not too long ago. And I've been meeting with my advisors because I've been obsessed with my death. Not because I think I'm going to die. I don't expect to die soon. So don't worry. I'm not sick or anything, but I'm obsessed with death because I know that we're all going to die. I've already accepted that. And I told my advisor, she said, what is your goal? What do you want to do? I said, I want to be an institution. I want you to institutionalize me, not in a bad way, right? Don't put me in a crazy house, but I need you to make me into a corporation. I need you to change me from being a human being into a concept, into an institution, because institutions live longer than people. Ideas live longer than people. Martin Luther King is not a person. Martin Luther King is an idea. He represents a set of values. He's a brand. He's an image. He's an institution. He's a corporation. People can build wealth off the name of Martin Luther King Jr. for the next 200-300 years, right? I said, I want to be an institution. I want to be like Dr. King. I want to be amongst the Nipsey Hussles and others. That I want to be amongst the angels where my name, just my name, is worth millions of dollars to my descendants and to the people that are behind me, so that 300 years from now, in the year 2319, the Black Business School is stronger than ever. We are the Harvard for Black people. We've got a rich 300-year history. We've had some of the greatest economic leaders in the history of our community come out of that school. Like that's what I want, and so ultimately I think if you really want to have power in this world, I encourage you to really think big. If I had a choice between being a smart person who thinks small and a dumb person who thinks big, I'd rather be the dumb guy who thinks big. Thinking big is how you get ahead. If you think small, it doesn't matter. If you're really good at what you do, you're just going to do a bunch of really small things and it won't matter. But go big, go hard, go institutional, and teach your children the same thing about systems and processes and all that. And then that way, they're not going to sort of fall into these economic traps that so many people get caught up in. So anyway, I see a question here. So let me answer your question. Charles says, once I've established a diverse portfolio of holdings, is there any strategic value for options? Yeah, options can be used for a lot of different things. Options can be used to either allow you to take on some risk and get the benefits of owning the stock without actually owning it, meaning that you buy an option. If you go into the blackstockmarketprogram.com, where a lot of your curriculum is, you guys can log in and check that out. You'll see where we explain how options sort of work, what they are, and basically an option is like life. It gives you the right to do something, but you're not obligated to do it. And so ultimately, stock options I've seen used for either people that just say, hey, I want to receive the upside of owning, say, Amazon stock, but I don't want to pay almost $2,000 for Amazon stock. So maybe they'll go buy stock options, which doesn't actually mean you own an asset, but you don't actually own shares of the company, but you own what is called a derivative of the shares, meaning a derivative is something that moves in the same way as the stock. So stock goes up, options go up, stock goes down, options go down. So you can put up less money and get a lot of upside. So if your stock does move, then yeah, you get a big payoff. The problem is though, that if your stock doesn't move or if it goes down, you can end up losing everything of your complete investment. So if I go buy Amazon stock, I'm not going to lose my whole investment. The odds of me losing everything are slim to none, right? But if I go buy an option, there's a good chance that I might lose everything, right? So it's either you win big or you lose big. So it's you're taking on extra risk. Or another thing people use options for is to protect themselves from various risks, or to lock in a profit, so they're what they call put options. Put options are where you have the option, instead of having the option to buy the stock at a certain price, you have the option to always sell it at a certain price. So that means no matter how far the price drops down, you can always sell it. You can always sell it at a certain price point, no matter what. So if I buy a put option that gives me the right, but not the obligation to sell a stock at say $40, if the stock drops to 19, I can still sell it at 40, which means I'm not going to lose money the way other people lose money. So with all options have value. The first thing we learned about options in grad school, and when I was working on my PhD, first thing you learn about options is that options never have a negative value. They always have a non-negative value. That doesn't mean they're always going to have a positive value. It could be worth nothing, right? But it's never going to be worth less than nothing. And you think about that, you've always known this in your whole life. Options are always valuable. It's always good to have options, right? Everybody wants to have options, right? Options are a lot like freedom. Freedom and options are like cousins with each other, where you have one, you usually have the other one. And so ultimately, stock options can be beneficial for your portfolio, but options have a price. You have to buy them on the market, and they can protect your portfolio, or they can give you additional, upside exposure if that's something that you want. All right. So does your investment class cover options? Yes. If you go to theblackstockmarketprogram.com, THE, that's theblackstockmarketprogram.com, we actually have a certificate granting program where you can get a certificate of achievement from the Black Business School, a degree you can put on your wall. I believe that, let me see if this code works. You can actually get a discount if you want to go sign up. It's THE, theblackstockmarketprogram.com. And let me see if this code works. If the code works, I can give you a discount code, so you can actually get a reduced price. If you yeah, there you go. Use the code word Powernomics. If you use the code word, if you go to the Black, THE, I'll type it in, THE, theblackstockmarketprogram.com. And you use the code word Powernomics. When you click to enroll, just type in Powernomics when you're about to check out. And what it'll do is it'll drop your price by 50%, so you get half off, and that's your fee now and forever. All of our programs in the Black Business School, unlike other universities, they are there's a 30-day 100% money back guarantee. We have an excellent customer support team that's always there waiting to answer your questions, to make sure that you're good, to make sure that you're happy. We don't have unhappy students, because all of any student that has any issue can reach out to us, and we take care of that person. I tell you, their standing orders are do what you have to do to make sure that person's happy. And also our goal is to make sure that when you walk away, that you will say, if you don't say that this was the best academic learning experience you've ever had, that you learned more from us than you learned in 4 years of college, which cost you $250,000, then we want to give you your money back. We don't want your money if you don't feel that we're better than any university that you've ever attended, master's degree, JD, law degree, doesn't matter. We are Black excellence personified, and I know how to do this because I taught on college campuses for 25 years, University of Kentucky, Indiana, University of Syracuse, University, et cetera. And even during that time, I used to say, Black people don't benefit from this. Black kids were coming to Syracuse and leaving $200,000 in debt, and they were mad. They were really mad because they were like, God, I got all this debt. And then I'd say, well, what can you do? Hey, what kind of jobs can you get? And I'd look at their resume and say, I'd be thinking they don't really have the skill to really add a lot of value to the point where they can make enough money to pay off this debt. So a lot of us get fooled into this sort of thing. So the Black Business School offers you a lower cost option, but a higher quality option. It's also more culturally relevant. A lot of college students go to school, and whether it's master's or undergrad, and they feel like they've been hit by discrimination. I'm sitting there thinking, this is crazy. You're spending $40,000 a year to go to school, and they mistreat you. You don't have any Black teachers. You feel like you're kind of out of place as a Black person. Well, we want an institution that's built for us, by us, and we are here for one reason and one reason only, to solve one problem, and that is the Black wealth problem in America. And we will, by the time we're done, we will have 10 million Black people or more that have been exposed on a very deep level to the most advanced, cutting edge techniques and ideas and theories on investing and wealth building, and we know how to break it down in a way that a 6-year-old can understand. And I know this is working because I just got invited again to come on the Breakfast Club. And when you're going on places like the Breakfast Club and speaking to millions of Black people, I've been on the Breakfast Club 4 times, and on the Wendy Williams show about 6 times, a bunch of other platforms. When you're doing things like that and you're speaking to the masses, and then you get the rappers listening to you, and the rappers are rapping about the things that you're talking about with economics, then what you've done is you've created America's worst nightmare, which is Black economic and intellectual unity. Everybody's on the same page. Everybody gets it. Everybody wants to be an owner. Everybody wants to be a boss. Everybody wants to be an investor. We're celebrating our rappers not for making great music anymore. We celebrate them because they made an investment in some startup company and made $300 million. Like that's the culture I want to create. Why? Well, because, you know, since I understand economics at a very deep level, I understand when I study other cultures. I studied Asians. I've studied the Jewish community. I've studied how the Arabs do things. You know, and what I found is that your economic strength comes down to how deeply embedded your economic thinking is in your culture. You know, most people in China who become great entrepreneurs and are worth a lot of money, I don't think they think of themselves like, oh yeah, I'm going to consciously go do entrepreneurship. It's just part of who they are. It's part of their family thing. It's just what the family does, you know? So I kind of want Black people to have that same thing. So we got to get, you know, push out the slave culture, create the boss culture, create the owner culture, create the investor culture. And we're doing that. And we're doing that very successfully. We reach 1 million Black people a week. And as you guys know, I'm very focused on this mission, and I will continue this mission even after I'm dead. I've made sure that in my estate plan that even if I die, you will still see me on a regular basis online. I just won't be making any new videos because I'll be dead. But I'm like Tupac. Tupac made so much music before he died that he still released an album every year for the next 20 years. I'll be like Pac. You'll still be seeing what look like new videos even after I'm gone. And so ultimately, this has all been thought out very carefully, and we are thinking big, and we are achieving that goal. All right. So anyway, let me just be quiet. I'm sorry, I get excited, and I apologize for going on too long about that. All right. So anyway, the URL is theblackstockmarketprogram.com. That's theblackstockmarketprogram.com. Use the code word Powernomics. You can get 50% off, and that's your investment now and forever. And make sure when you go through all the material, you get your certificate, put it on your wall, rep your flag, tell everybody you went to the Black Business School. Don't brag about University of Iowa. You don't own that. Don't brag about going to North Dakota State. You don't own that. Don't brag about Harvard and Yale. You don't own that. This is what you own. This is built by us. We built this school with our bare hands, just like the ancestors did. You know, when they came out of slavery, they built a school, and they didn't have 1/10 of what we had. So I said, yeah, let's build a school. Let's make this work. We can do this. So anyway, let's keep going. John Womack says, I was listening to you and the brother yesterday. He was talking about investing as a way of making money. We are learning long term. I think we are learning long term. I think what's the difference? I'm sorry, John, can you reframe that question? Because I know what you're talking about when you say the brother yesterday. That's Julian Gordon, and Julian's doing the Emancipation Equation event this weekend, which is totally free to you guys. You can go to theemancipationequation.com, that's theemancipationequation.com. I don't know what that last part, we are learning long term, I think. What's the difference? That part I don't know. I don't. You got to reframe that question, brother. So if you reframe it, I'll answer it that way. Are the videos the current recordings, or are they older? Basically, for the last 3 or 4 years, we've saved pretty much everything, every lecture, every commentary, every speech, every dialogue we have had, every Q&A. I save all that as content in the Black Business School. So you can literally go and you'll see some videos where you'll see the trim, the lean and trim Boyce, which you see now, who's preparing to run a marathon, or you'll see the fat Boyce, you know, who couldn't run down the block without getting out of breath, right? So you'll see different versions of me because basically, as a finance professor, you know, I know that there are things that I can talk to you guys about that may not seem like a big deal to me, but they're a big deal to you guys, you know, and so what I did was I just kind of saved a lot of that in terms of, you know, all the Q&As I did with students. So pretty much everything you need is already in there, and it's better than what you get in other places, for a lot of reasons. So let's keep going. Lee Cameron, how important is it to understanding what institutional investors are doing? It does help a little bit. If you invest, there are ways you can do little things like you can set up a stash account, or you can invest with a fund in stash, for example, where you can just track the experts. I got to go see what it's called, but basically they're like, look, don't just take the guesswork out. Like, we'll just have you invest in whatever Warren Buffett is investing in, right? And that's a good way to just set it and forget it. I'm a big believer in that. I'm not a big believer. I'm not really into like day trading and flipping stocks constantly and all that. I'm not going to say it can't work. I'm just going to say that there's a lot of evidence to say that that's a lot of extra work for nothing. And that's, just kind of the truth. What is the Emancipation Equation website again? It's theemancipationequation.com. THE, that's theemancipationequation.com. So somebody type that in if you could. That way everybody can see it. I'll pop it in here. Let me see here. Theemancipationequation.com. Okay. So right now, in case you guys aren't paying attention, there's some interesting things happening with financial markets. Donald Trump is always a big factor, a risk factor in the market. So, whatever Donald Trump decides to tweet that day, those are billion-dollar tweets, because literally he can move the economy. He can move the stock market by, billions, just by saying, oh, I talked to China today and it did not go well, whatever. And then the prices of all these companies start to plummet. And one of the things I'm mentioning here is this thing with Capital One. If you guys are with Capital One, they did have a hacker that apparently came in and, stole a bunch of data or something. So be mindful of that. If you're a Capital One person, you might want to Google that to see if you're affected. Also, let's see, there's something here about stock buybacks reaching dangerous levels. Okay, that means, let's see here. They said the U.S.-China trade war might be having a chilling effect on business investment, but it's not derailing the splurge and share buybacks. So companies are buying their shares back, which is an interesting thing that tends to push prices up because two things. One, you're reducing the supply of the number of shares in the market. And then secondly, when insiders who have more information than the average investor start investing in something, other people pay attention because they're like, well, wait, you're an insider. You know what's going on better than I do. So why are you buying up all your own stock? There must be something good going on here. So ultimately, it looks like a lot of companies are doing a lot of buybacks. It said S&P 500 companies are on track to buy back another $940 billion of their own stock in 2019. It's almost $1 trillion. According to Goldman Sachs, that would easily surpass the record buyback boom set off last year by President Donald Trump's corporate tax cut. So they cut corporate taxes, so they ended up buying a lot of their own stock. But corporate America's rush to pay out shareholders could be getting out of hand. Quote, payout ratios are elevated, cash balances have declined, and leverage has risen to a new all-time high. Oh, that is interesting. So basically, it looks like what David Kostin, chief U.S. equity strategist at Goldman Sachs, is saying is that a lot of companies are taking cash that they have in their bank account and they're using that to go buy their own stock. So when you do that, that means you're less liquid. You have less cash on hand, and you're depending more on debt markets to provide the liquidity you need, or the funding, the money you need in order to maintain your company, handle new investments and stuff like that. So you're heavily levered. So it's like a person that basically empties out their savings account to go buy a bunch of real estate. So then you suddenly got a very low balances of cash in your bank account, which puts you in kind of a risky position in case something goes wrong or in case you need cash. But then let's say that you say, oh, well, it's okay though. I'm going to go and to the bank and I'm going to get a loan, or I'm going to use my credit card to cover my cash needs. You might feel safe, but the problem is that you're now dependent upon the bank to provide your economic security, which is a very insecure position to be in. So that's kind of what's happening here, in terms of what people see as an alarm with the markets. All right, so let's see here. Let's see. John Womack says, "I'll try keeping it short." It seems like he was using it more like his job. Okay, talking about Julian Gordon, his income, making a living. I've been learning it seems more so investing for long-term and not buying and selling unless I'm transferring. Set it and forget it. So I'm wondering if there's a difference between, okay, so you're saying that Julian looks like a guy who's working for his money as opposed to set it and forget it, which you maybe do if you invest in the stock market and you don't have to do anything. You're right. I mean, being a property owner, that is one important distinction. That is one important distinction. It's basically one of those things where you have to make a decision as in terms of what kind of life you want to have. What do you want your quality of life to be? I can say that one of the downsides of being a property owner is that you have work that you have to do. Like you can't just set it and forget it unless you've made arrangements for someone else to be compensated to manage your property. So I would encourage you to, think about that. Also, remember that, with some types of investing, it's all about what the market does. If the market does well, you make money. If the market does bad, you lose money. But there's some types of investment where skill is a huge factor. Real estate's one of those areas. A skilled real estate investor is gonna do better than an unskilled real estate investor, right? If you don't know what you're doing, then you're gonna lose money. So ultimately, one additional investment that has to be made if you go into real estate is having people close by who know what they're doing, that can either show you what to do or that can do what you need them to do, in your stead in case you can't do it yourself. Another thing I think about is franchising. In case you guys don't know, actually, if you go to blackmoney104.com, we actually have a franchise program, a program that teaches you all about how to own and buy and sell franchises, which is a really great way. It's a great line of business to get into if you're looking for business models that are already set up. You don't have to figure out like, okay, how am I going to make money and how am I going to protect my investments and all that. The franchises are great because they kind of just show you all that in advance. So if you want to check that out, you can actually go to the Black Franchise Program. Or it's either blackmoney104.com. You can type that in, or if you just go to theblackfranchiseprogram.com, you can find it there. But the thing about franchising that's interesting is that it's kind of one of those things where different franchisees are going to expect you to do certain things to maintain your investment. Some companies say, look, we don't care how you run the business, just as long as you, just follow some basic rules and give us money every month, we're fine. Some companies, though, are like Chick-fil-A. Chick-fil-A does not let everybody own a Chick-fil-A franchise. Chick-fil-A protects their brand the way a mother protects her baby. Chick-fil-A is like, everybody can't own a Chick-fil-A. Our stores are really profitable. Each Chick-fil-A store, Chick-fil-A stores are the most profitable stores on a per capita basis of any other restaurant in America. Chick-fil-A is one of the best run companies I have ever seen in my life. And here's the thing, a McDonald's franchise requires a ton of money and a ton of time. Chick-fil-A is like, we don't even want your money. You can open up a Chick-fil-A for 10 grand and we'll put up a lot of the money ourselves. But the requirements necessary for you to be considered to get a Chick-fil-A franchise are pretty intense. They're going to really scrutinize you before they decide to make you a partner and let you run one of their stores. So, and I know one of the requirements that Chick-fil-A and McDonald's have is that you cannot just be a passive investor. You can't just go buy a Chick-fil-A and say, oh, I own 18 Chick-fil-A's and they're all making money and I just drop in every now and then and get a chicken sandwich to say hi to everybody. No, you're going to be in that store, working in that store for so many hours a week, no matter what. Doesn't matter if you're a billionaire. So you can't be a rich person and just go buy a Chick-fil-A franchise unless you made a deal with a franchisor somehow or somebody else that runs the franchise. And but for the most part, even then, even where you get the money, even where the actual person who runs the franchise got the money from is scrutinized. Like, so you can't go and borrow a bunch of money and then take the money you borrowed and go buy a McDonald's franchise. McDonald's has requirements on how much of the money has to be your money. And that's important. There are actual entire financial theories around this idea that, that how much of your own money you put in really shapes how you treat your investments. It's just like anybody ever heard people talk about how when you have renters living in a certain community, the community goes south because people don't care because they're just renters. Maybe they don't take as much pride in keeping the streets clean and sweeping the porch and painting the walls and all that. Well, versus owners kind of they're connected to the property, so they're not gonna let it kind of fall apart as much as a renter would. In fact, I was looking at my grandmother's house, my late grandmother Felicia, the one who I talk about all the time, who introduced me to finances. And it's so funny, I looked up my grandmother's house, the house she lived in up until about 2001 or something. And I was like, oh, let me just see what the house looks like. So I looked on Google Maps and I looked up the house to see what it looked like. I didn't recognize the house. because it had fallen to pieces. It looked like a dump. I said, she would be rolling over in her grave if she saw this house. Like, what is this? What is going on? And basically, I remember now, and then I showed my mother. I said, have you seen what happened to Mama's house? Look at what they did. Look at this house. And she told me, she said, when she moved out of the house, the people that moved in were renters, or it was like, honestly, like maybe Section 8 kind of thing or something like that. These were not black people now, so we ain't gonna put this on black folks. But y'all know what I'm talking about. PWT, I think is what we call it. It don't stand for pretty. Well, remember PYT was pretty young thing. PWT stands for something else, but I'm not gonna say it. But you know, they basically came in and they just tore it up because they're like, this ain't our house. We don't care. So basically, the reason Chick-fil-A and McDonald's and other companies require you to put your own money into the investment is because they know that you're not necessarily going to be quick to throw away and ruin something that you own, something where you put your blood, sweat, and tears into building it. Banks, in fact, actually, when they're looking at a risk profile on whether or not they're going to loan you money, one of the factors is, well, how much money did you put up? If you put up, you know, a bunch of your own money, then they're going to be more likely to give you the loan than if you came in and said, I want 99% financing. I want you to put up 99% of the money. I'll put up 1%. Well, that's another way of saying, I want you to take all the risk, but I'm going to get all the reward. Right? I get business deals like that all the time. People reach out and they're like, okay, Dr. Boyce, I've got this idea on how we're going to just go out and make $1 billion and I just need your help. I want to partner with them. I'm like, okay, so what do you want to do? Okay, well, here's what we got to do. I need you to put in $10,000 and into my idea, and then we'll just split the money. I'm like, okay, well, what are you putting up? Well, I'm not going to put up anything, but I'll do blah, blah, blah. No, like I know, I need to know, I need to see what you've done, how much, either how much money you put in or how much time have you put in. If you put 3, 4, 5 years into this business and your blood, sweat, and tears and of all your money into it, then I'm more likely to consider that proposal than if you just tell me you've got this fresh new idea where nobody knows what's going to happen. There's a lot of uncertainty. Uncertainty is a risk factor. You guys who are in my masterclass have heard me talk about that. Anything that's uncertain, anything that's not clear or not sure is a risk factor in investing, and risk factors reduce the value of an investment. Stocks drop based on higher risk factors. Any type of uncertainty. Uncertainty can be, we don't know what the global economy is going to do next year. Uncertainty could be, we don't know what Donald Trump's going to tweet, tomorrow. Uncertainty can be anything that can cause the value of the asset to drop. So one type of uncertainty is if you got this fresh new idea that's never been tested and never shown proof of concept, you've never shown me that it can actually make money, then why am I going to put up real money up against your fantasy money? I'm not trying to do that. I'm not trying to go broke, right? One of the rules of wealth, really, one of the most important rules of wealth is preservation of capital. People that actually have wealth and keep it are people that know how to preserve and protect their capital. You got to yank that dollar bill out of their hands before you get it. But guys, when these basketball players and whatever, they're doing all this, they don't stay rich for very long because they violated one of the most important codes of wealth, which is protecting what you have. Okay, so let me see. I'll answer some more of your questions. Oh, by the way, so some of you are asking for the URL again for the thing that we're doing Friday. It's for free. It's all about real estate and ownership of rental property. If you're interested in buying rental property and owning it and selling it and generating income by buying, say, a multifamily building and letting the tenants pay the rent and then they pay your mortgage or something if you decide to live there, it's a great business model. Julian Gordon's an expert at it. He owns millions of dollars in property, and he's going to teach that for free on Friday. So if you go to theemancipationequation.com, that's theemancipationequation.com, and sign up, you can get a spot in the gathering we're going to have on Friday. It's brought to you by the Black Business School, and hopefully to give you a chance also to learn more about the Black Business School and how we can serve your educational needs. Okay, so what I'm going to do is I'm going to dig in here and find some more of your questions. Let's see here. What is the best resource to keep regular track of stocks and their fluctuations? I think CNN Money is good. I think also going to what you call it, not just CNN Money, but even Google. Even in Google, if you just go into Google and just type in the name of a company, or type in Amazon stock or something like that, like they'll give you the information about the price right then. Also, Yahoo Finance is really, really good. I'm a big fan of Yahoo Finance. So those are some options that you may want to consider in terms of things you can do to to kind of keep up with the markets. And remember, investing doesn't require that you're always on top of the markets and you're watching what happened every day. I watch what happens on the market every day because that's part of my job and it's interesting to me. But a lot of times I'll just see what's going on and I don't do anything. I don't make any financial moves right then because I'll say there's no reason for me to change my portfolio. So a lot of times I just really go back to set it and forget it. Whatever your strategy is, make it long term. So that way you can get the long-term benefits of long-term investing. So Charles says, aside from your financial content, I like to watch Bloomberg financial content. What's your take on trading on the foreign exchange, such as the ASX? I think it's great. I think any sort of international diversification adds value to your ability to make money. So spreading your money out is one of the most important rules of investing too. In fact, I was mentioning to you guys earlier that one big rule of wealth is preservation of capital, like protecting your capital. Well, another important rule is spreading your money out and not putting all your eggs in one basket. So I apply that to, say, athletes and entertainers because they're among the most visible people in our community. And a lot of athletes, when I hear about athletes going broke, like flat broke, like, or I made $100 million and now I have, nothing, that tells me right there that they violated at least one of those rules. Clinton Portis had $10-12 million invested and his financial advisor lost it all. So chances are, if you were to go back and look at the forensics of what his investor was or what his advisor was actually doing, I'm sure his advisor wasn't diversifying his money properly, because if he properly diversified him, there's no way he could have gone broke. Also, that rule of preservation of capital, when I heard about Antoine Walker, the NBA star, he made $110 million or something like that, and he went broke. I knew that he probably violated that other rule, preserving the money that you have. I mean, Antoine loved to spend. Allen Iverson loved to spend. But one good thing about Iverson, actually, that's interesting, I'll talk about this a little bit later, is, he's actually protected. He actually had somebody at Reebok, I think, that forced a deal where Iverson was not going to get all his money at once, because I guess somebody saw Allen Iverson's really bad spending habits and the way he just loved to give his wealth away for nothing. And he said, we're going to just hold his money, lock it up, so he can't get it till he's 50, and or maybe every decade he'll get, a multi-million-dollar payment. So Iverson will probably never go broke, but unless he has so much debt that, those big payments have to go back to paying the debt. Because, if you get big tax problems and stuff like that, you'd be like Joe Louis. Joe Louis was fighting until he was an old man. And every time he would get, paid from a fight, they would come take that money because he had tax debts he had to pay. So ultimately, if you're not thinking about money, if you're not protecting your money, you're not going to be very good at making it. You're not going to be very good at keeping it. And so, I think the question is, I see people that work really hard to stay fly and to stay sharp and to stay, stay looking good, or to stay, good at a sport or whatever. So the question is, what matters to you? What are you focused on staying good at? If you're not paying attention to something, you're not going to be good at it. So if you don't care about being able to read or do math or whatever, then you're not going to be good at those things. So a lot of people I see, you see a 40-year-old man who can't read and he's intelligent, but he can't read. That tells me that reading was just not important for him. But maybe that same guy might be an expert at picking up women because that's important for him, right? Or maybe he was really good at playing football because that was important for him. So it's always about priorities. So one big thing about wealth is that people that tend to have a lot of wealth tend to make it a high priority to make their money and to keep their money, right? So make it a priority for yourself, make it a priority for your children. That's really, really important. Okay, so let's see here. So give me a second here. I'm gonna hit a couple of buttons. And don't forget, again, the stock market program, if you want to go check that out, is theblackstockmarketprogram.com. THE, that's theblackstockmarketprogram.com. Use the code word Powernomics. You can get 50% off. I think you guys are gonna like it.